What's going on, everyone on YouTube? So let's have a conversation. Should you pay off your property for your rental property, or should you buy more rental property and borrow money?
When you invest in paying off your mortgage early, you lock in the returns. And this is because you're converting debt into equity and you're reducing the amount of interest you'll have to pay. Owning your home and not having to worry about making the mortgage payments can generate a tremendous peace.
Talk about the pros and cons about paying off your rental properties. And before that, let's talk about some of the pro and cons about having a rental property. And comment down below, like and subscribe to my video, and it really helps the YouTube algorithm if you do this. Now, let's talk about this. What is the pro about having a rental property? People invest in your rental properties for a number of reasons, such as diversity of investment portfolio, generate rental income, and more direct control of your investment. And that's some of the pros about having a rental property. Now let's talk about the potential drawback about owning a rental property. And that includes liquidity, dealing with tenants, and deteriorating neighborhoods. So those are some of the cons about it. And let's go into this video now about talking about should you pay off your rentals or should you keep borrowing for your rental properties. And I'm going to just go off right off the bat and tell you some of the pros and cons about it. But personally, my belief, it depends on your situation. And here is why. If you're trying to build your net worth faster, borrowing money will build your net worth faster and get more houses, and you can do a very fast snowball. But it's very risky. Now, the con of that method is you will have very low cash flow compared to having each property paid off. So it depends on what you need. Do you want to build your net worth or do you want the cash flow? And that's the main difference on this. And that's where I'm at today. So I have a few properties and I prefer to have the cash flow. So I'm going to just pay off my properties and buy houses in cash now. Because at the end of the day, I can get better deals and I can flip houses easier if I just pay them off in cash and not deal with financing and giving someone portion of my income for this. So that's my reasons behind it. But let's really go into this video and go over some of the pros about paying off your rental. So before you do pay off your rental and do everything else like that, you need to make sure you have a few things taken care of and questions if it's important to you. Number one is, are there sufficient funds on hand for personal finances and emergencies before you start paying off it? Number two is your current is there other current debt that has higher interest rate that you might want to pay off first before you start tacking down paying off your rental properties? And then number three, is your retirement fully funded or are you okay at that situation to move your funds away from that to pay off your rental property? So this is case by case basis, and you might want to ask yourself these three questions before you get into paying off your rental property, because you don't want to put yourself in a deficit or hurt your finances just to pay off a rental property. Now, let's talk about the advantage and or the pros about paying off your rental property. And here's 5 potential advantages to consider when you decide to pay off your rental properties. Number 1 is increase of cash flow. The monthly mortgage rate for a $125 loan is about $600 per month, with the principal interest based at 6-7%. It depends. It can significantly go into your cash flow, and it's very hard to cash flow properties if you have a high interest rate, and it kind of makes no sense in that aspect. If they're giving them money at 1 or 2% low cash flow, it's very easy to borrow that money. But at 7, 8, 9%, it kind of doesn't make sense because now it hurts into your profit. And this is where you need to understand it's about cash flow on these rental properties if you're trying to build passive income to retire off of it. So it depends on that. Number 2 pro is you can offer aggressive rents. So I give you an example. Each one of my properties rent about $2,000 to $2,200, and currently the market price is about $2,300 for each of those properties. Well, if I have it fully paid off, I can keep it at that $2,000 and don't worry about it. Yes, I still able to get a good profit margin, but the people who are coming in now with 8%, 9%, 7%, 6% interest rate, they cannot be at the rental rate where I'm at because they will not profit from it. So they're out of the market in those areas. So it allows me to be more aggressive and allows me to have a better opportunity to keep my rental market in that area secure for mainly for me, and it's better for my tenants because now they're not have to pay higher rental rate, and I can be picky and choosy about my renters because now I can demand if I have lower rents than the other comparative properties, I will have more people applying, and I can pick the best tenants with the highest credit, good jobs, so I don't have to worry about it. So I can pick the cream of the crop of renters and not really worry about them wrecking my property. So you understand, with aggressive rents, I get more people, and I can also bid on or pick the proper people who I want to rent out my property. Number 3 pro is you have fewer worries. Yes, you have fewer worries if the property's paid off. Something breaks, that $2,000 normally can fix whatever breaks that month. So they pay you, you don't use it, guess what? You can fix it without worrying dipping your pocket. Most of my properties, whenever I rent them out and I borrow money with them, and currently I barely break even or barely make a couple of $1,000s a year. So at the end of the day, I could cash flow all that and make more money in cash flow in this situation and not really worry about it. Now, number 4 is income more important than the write-off. At the end of the day, one advantage on a rental property is you get to write off a bunch of different things, and you get better tax advantage and everything else like that. But for me, I can make more money and with write-offs than I can do with tax exemptions. So for me, it's all based on the situation because I can invest to make that property nice and pretty and keep it going and help the value of the property to and increase my chances of have rentals and have write-offs in that situation. Slowly upgrade the house whenever the renters leave, and I can sell it for a higher profit for a long-term flip. And that's where I'm at with it. So I get used this income for more importantly for write-offs, for upgrades for the house, for things to do around the house, than worry about saving money every month to get fix things that breaks eventually. If you didn't know, things in houses breaks all the time. Water heaters need to be replaced, AC needs to be replaced, and with that income, I can pay someone, have it as a write-off, better than me worry about tax. Because at the end of the day, it's a write-off anyway, and the cash flow really helps in this situation. And lastly, living debt-free in retirement. Having that big cash flow, living debt-free, and not worrying about anything is the biggest thing you can do. So if you're building up wealth, yes, go borrow money if you want and take that risk. But when you get into retirement or closer to thinking about retirement, you want to pay off more debt so that you can travel and not worry about it. I want to be able to travel and not worry about any of my properties and just fix it as we go and upgrade them whenever we have to and not worry about the mortgage every month. If I don't have it rented out and I'm in retirement, That's money that's coming out of my retirement to pay for that mortgage. And I don't want that. I really prefer to live debt free. I did it whenever I was semi retired and or micro retirement for a little bit. And it was not worth it because I was dumping a lot of money into it and really made me second think, hey, should I even have a mortgage? And I should have just paid it off because I would have done way better and not had to dump so much money into my rental properties for the mortgages. All right, those are my 5 pros for it. Now, quickly, what are some of the cons or disadvantage of it? Is you do get a lower return, and this is where you need to understand if you buy the house for the exact same rate, you can buy 4 houses at 200,000 and pay the 20% for each one. Let's make a simple math, and you have 4 houses and you have a higher return when you buy those 4 houses. At the end of the day, yes, that's true. But you forget, people need to add the factor is with cash and you paying a rental property in cash, you normally can get it for 20% cheaper. So you don't have to wait 4 or 5 years to build that $10,000-$20,000 of net worth. You can buy a house and increase your net worth by the property of the value by getting it for a discount. So yes, you can. One advantage is there's a lower return, and that is part of the thing you need to understand, that it is a lower return on your cash on cash value if you don't know what you're doing. Now, the other issue with it is fewer liquid assets. Because you own that property and outright, you do have lower assets, less assets than if you did it the other way. And it's very, very, well, best way I can put it, you don't have as much cash whenever you pay it off in cash. But hey, it is what it is. It's one of the disadvantages. And the third thing for disadvantage is loss of tax write-off. You lose a lot in tax write, but you have to also think about like this, that tax, principal, and all the other stuff you're paying, the renter is paying that. So you do lose that tax advantage, but then again, it's really the renter paying it, and you get that cash flow. So you have to think about it. Whenever you do invest, there is tax implication, and this is where you need to talk to a professional. So you lose a lot of tax advantage whenever you do this route. And yes, I understand this myself. I did talk to an accountant, but after looking at the numbers, the tax advantage for me is not good enough. It's just the write-off is good enough for me to deal with every year. So, hey, what's my closing thoughts about all this and what I really think about it? Which is the best method? It depends on your situation. Closer you get to retirement is more you want to pay off the rental properties and not worry about it, to live debt free. But if you're early in your investment career, you can take more riskier, borrow money, and you get more returns. But you don't want to keep doing it because eventually you might hit a snag and it's going to really hurt. And if you had 10 rental properties and all of a sudden 5 of them don't rent out, if it's each $2,000 a pop for a mortgage, guess what? You had to pay $10,000 out of your pockets to cover those mortgage. And that's the risk you have to take. And sometimes it takes 3 to 8 months to get these rental properties filled again. So is it really worth it if you're dumping that much money from your own pocket to keep your rental portfolio? So you'll have to think about it like that, and like and subscribe to my video, and it's all about that risk.